Alright, this is understanding federal income tax and how your Siegel AmeriCorps Education Award impacts it. My name is Diane, and I just completed my first term of service as an AmeriCorps member, and I'll be returning for a second term in a few weeks. I am not a certified public accountant. I just happen to know a bit about personal finance, and I hope this video will help you understand it a bit better too. So first off, congratulations on completing your term of service and earning your Siegel Education Award. If you completed a full term, your education award amount is $5,775 for the year 2017. If you're like me, you have student loan debt that you want to pay off. But you've been warned that using the full amount of your Siegel Education Award may have tax implications. So in order to understand what that entails, we'll have to go over how federal income taxes work. I have it broken down into 4 steps: adjusted gross income, taxable income, tax liability, and what you owe or what you're owed. First step, adjusted gross income. So gross income is all of the money you earned before taxes were taken out. Now, there are many types of above-the-line deductions. Some common ones are business expenses, moving expenses, and payments towards student loan interest. So if your student loan servicer provides you a 1098-E in January, that's an above-the-line deduction. Don't worry, if you're using a tax software like TurboTax, which you should be able to use the free edition if your adjusted gross income is under $33,000, they'll ask you questions to make sure you get all of your tax breaks. In some cases, if you don't have any above-the-line deductions, your gross income and adjusted gross income will be the same number. Here, I'm using my tentative 2017 income as an example. The $6,486 I got by multiplying 564 by 11.5 paychecks. Because remember, gross income is money you earned before taxes were taken out. The $337.50 is a side job I worked. The $169.76 is the amount of interest I accrued while my loans were in forbearance. If you have not gone into the AmeriCorps website and requested this yet, please do. This is free money. Let the Corporation for National and Community Service pay for the student interest you accrued during your term of service. And the $8,300 is what I expect to earn with the team leader pay increase at 12.5 paychecks. Since I'll be moving soon, let's say it'll cost me $150 for the U-Haul and gas. I may have additional above-the-line deductions, but we'll keep it simple for this example. After you calculate all of that out, my adjusted gross income is $15,143.26. All right, let's move into the next step, taxable income. So the government will not tax all of your earnings. They understand their cost of living, so they're going to give you deductions and exemptions. Once you subtract out those deductions and exemptions, then you'll have your taxable income. For a single filer in 2017, your tax deduction will be $6,350. And your personal exemption will be $4,050. If your filing status isn't single, just Google standard deduction 2017, head of household, married, whatever your filing status may be, and it'll come up. But for the most part, most of y'all are going to be single filers. There's also something called itemized deduction, but I can't imagine that for any of y'all, that amount will be greater than the standard deduction. However, let your tax software figure that out for you. Also, about the personal exemption. If someone is claiming you as their dependent, you will not get a personal exemption because they're going to get your exemption. So just be aware of that. So earlier, we calculated my adjusted gross income to be $15,143.26. We subtract out the standard deduction and the personal exemption, and we'll get $4,743.26 as my taxable income. Next, we'll determine tax liability. Tax liability is calculated by multiplying your taxable income by your tax rate, which means we get to talk about tax brackets next. So again, the information presented here applies to single filers. There are actually 4 more rows to that table, but I didn't think anyone watching this video would have a taxable income greater than $91,900. What the table is trying to communicate to you is this. For the portion of taxable income from 0 to $9,325, that will be taxed at 10%. For the next $28,625 of taxable income, i.e. in that range of $9,326 to $37,950, that portion of money will be taxed at 15%, so on and so forth. And this is called a progressive tax system. There is a common misconception that being pushed into the next tax bracket hurts you. This is not true. It will always benefit you to earn more money. Someone earning $100,000 a year is going to pay the same amount of taxes on that first portion of $9,325 taxable income as someone earning only $20,000 a year. So back to my example. $4,743 of taxable income puts me squarely in the first tax bracket. So I take that amount and multiply it by 10%, making my tax liability $474.33. Now, does that mean I need to pay the IRS $474.33? Not quite. Throughout the paychecks, you have had things like federal income tax, Social Security tax, and Medicare tax withheld. We do this so we're paying bit by bit throughout the year instead of being hit with one large bill at the end of the year. If your tax liability is greater than the amount of taxes withheld throughout the year, then you owe Uncle Sam money. However, if you have withheld taxes more than your tax liability, Uncle Sam is going to cut you a refund check. In a perfect world, you don't owe any taxes and you also don't get a refund check. Because if you kept all of that excess money instead of having it withheld, you could have, in theory, earned interest on that money. Also, tax credits are a thing. Again, your tax software should identify if you qualify for any. So, how do you know how much federal income taxes were withheld? You can find that on your handy dandy W-2. For this example, I estimated the amount of taxes withheld by multiplying my CDR wages by 5.5% because that was the ratio last year. So in this instance, my taxes withheld is greater than my tax liability, so I subtract my tax liability of $474.33 from $813.23, and I end up with $338.90. Yay, refund check. The steps again are calculating your adjusted gross income, subtracting deductions and exemptions from your adjusted gross income to get your taxable income, multiplying your taxable income by your tax rate to get your tax liability, then figuring out whether your tax liability is greater or lesser than the amount of taxes you've withheld throughout the year. Great. We've gone over all of the steps and you should have a basic understanding of federal income taxes at this point. Now, I'm going to throw my Siegel Education Award into the numbers and we'll see how that impacts my taxes. So before we said my adjusted gross income was about $15,000. Remember, your Siegel Award is considered income. So let's say I use the entire $5,775. My new adjusted gross income would be close to $21,000. We'll take that number and subtract out the standard deduction and personal exemption and get $10,518.26 of taxable income. With that $10,518.26, I'll fall into the second tax bracket. So that first $9,325 is taxed at 10%. Now the amount above that, see where I subtract $9,325 from $10,518.26? That amount will be taxed at 15%. I take those two amounts and add them together, and that gives me a tax liability of $1,111.49. So here, my tax liability is greater than the amount of taxes I had withheld, so I'll end up needing to pay the IRS about $300. In the first example, where I use none of my Siegel Award, my tax liability was $474.33, which meant I was going to get a refund check of $338.90. In the second example, where I used all of my Siegel Award, my tax liability was $1,111.49, which meant I would have to pay $293.26. Of course, these were the two extremes. You can also find a middle ground and use a portion of your Siegel Award in the 2017 tax year and save some of it for another year. However, even though it's about $640 of additional taxes I'd be paying in the second example, paying taxes isn't such a bad thing. Our tax dollars fund things for public good, so it's a moderate L. The point of this video is to help you make an informed decision on how you'll use your Siegel Award. Some final considerations for you are: if your income is going to be the lowest it'll ever be this year, it might benefit you to use all of your Siegel Award this year. So for those of you who are going back to school and will not be working during that period, this may apply to you. If you choose to use your Siegel Award all at once and choose to not advance the due date, make sure you'll have funds for monthly payments on your student loans after that. You wouldn't want to put yourself in a tight spot struggling to make monthly payments. Otherwise, it'll just be better for you to space out your Siegel Award. All right, that's it for me, y'all. Thank you for watching the video. Best of luck with making the best use of your Siegel Education Award.